Good morning. Welcome to Gratz Park Private Wealth. I'm Sherry Hawley, President and Senior Wealth Advisor. Today is Wednesday, March 12th. I typically do these short videos on market recaps at the end of the month for our newsletter. However, with the increased volatility and uncertainty we're seeing, I felt the need to go ahead and reach out. So what's going on in the markets right now? Obviously, the headline news are tariffs and potential recession in the U.S. economy. Well, those are the headline news. Let's parse through what's really going on. So I'm going to talk about some of the positives and I'm going to talk about some of the negatives. Let's get the negatives out of the way first. So obviously tariffs can be very negative. It's a tax on goods, and typically that gets passed on to the consumers. So the reasoning there is if there are broad tariffs on all goods and on countries that we are some of our largest trade partners, the feeling is, oh, we're going to see a recession because consumers are going to soften. And quite frankly, we have seen that. Consumer spending has softened in the recent months. Also, too, housing has really taken a downturn. As you can imagine, high interest rates, the potential of a U.S. recession is keeping people on the sidelines in housing. And then finally, inflation has crept back up too. So all of those things obviously are negatives and very dampening to the economy as well as investors' feelings towards the markets and our confidence. In that, part of the volatility that we're seeing is what we would experience in most administrations as they move in and place their agenda and policies. And Trump has come in with a heavy fist on tariffs. That is one way he's using leverage for negotiations. So that chaos and uncertainty is going to keep the markets a bit volatile. Now, just a reminder, we typically see a correction. A correction is 10% drop from our highs, at least once every 12 to 15 months. We didn't even see that at all last year during the presidential election. So maybe we're due for a little bit of the volatility anyway, considering that we do get corrections about every 12 to 15 months. So far, we're not in a correction phase. The NASDAQ, which is mostly growth stocks, had inched towards a correction, but with today's market, they're back up. So we may not even see a full-blown correction. So let's talk about some of the positives in this market. Well, first of all, we have 3 rate cuts that still are going to work themselves through our economy. So the Fed had cut rates in September, November, and December for a total of 1%. Those take about 12 to 15 months to work themselves through the economy, and that will be a boost. Secondly, Trump has promised lower corporate tax rates going from 21% to 15%. That will certainly increase profit margins and corporate earnings. Thirdly, deregulation. That is another thing that Trump's administration wants to put in place, is less regulation, which will allow for more mergers and acquisitions, which is also a boost to the economy. And then finally, just what we had been experiencing over the last 4 or 5 years, and that is investment in innovation, AI, which is making us more productive, more efficient in our productivity, and we're seeing growth. So those will still be around us as we come through this uncertainty and volatility and we ramp back up. We will still have those things in place. Lots of companies are making huge investments and continue to in AI and innovation. So I want to reach out to kind of remind ourselves, yeah, there are some negatives out there, but there are some positives as well. This uncertainty will create volatility, but at the end of the day, what we're going to focus on are fundamentals. And right now, we still believe that the U.S. economy for this year, barring any broad tariffs that are put in place, we expect the economy still to grow above 2%. Which should still give us very good corporate earnings in the range of 11% growth. You know, last year we saw corporate earnings grow around 16%. So 11% is a little more modest, but still very good for the S&P 500. So just keep that in mind. That is our rationale. We stay focused on that. We try to move away from the headlines and the uncertainty in the short term and keep our eye on the long term. And that's why we're telling our clients to stay invested. Certainly we're cautious, and if things were to change and tariffs that get put in place are more broad, we may make adjustments then. But for now, we're staying the course. So I just wanted to reach out, as many of you are getting more concerned with what's going on. But let's just keep our eye on the ball and know that we do have really good fundamentals still in place as we move through the remainder of this year. And we will stay in close touch. Thanks for joining me here at Gratz Park Private Wealth.